Hey everybody, I'm Zach.
And I'm Jesse.
And you're watching In Depth.
On Now You Know.
You can help support our channel by heading over to ecoware.us, where we've got new designs every week. We carbon offset the production, shipping, and life cycle of every product, and we plant a tree for every order.
And we're brought to you by abetterrouteplanner.com. They just passed 18 million EV trips planned. And there's a new app for Android and Apple, making it even easier to use a Better Route Planner. Check out their new premium version of the app by clicking the link below to get a 30-day free trial.
And we're sponsored by our friends at the solar-powered hotels in Schaumburg, Illinois, the Fairfield Inn and Suites by Marriott, and the Town Place Suite Hotel right next door. They're both connected and they're both solar-powered.
All right, so to start off this episode, I want to thank everyone who works at Tesla or who has ever worked at Tesla. Thank you so much for your hard work and contributions to what I consider to be the company that is doing pretty much the most good in the world.
This is one of the most exciting in-depths for me. I mean, I think that almost every time. But again, this is super exciting. You're going to see why.
And secondly, I want to thank Fiat Chrysler.
Wait, what?
Or FCA. And you're going to find out why in a bit.
So this is what we all wanted to know.
Tesla is profitable!
Yeah, super exciting.
Oh, man.
A GAAP operating income of $327 million with a 5.4% operating income in Q2 and $104 million of GAAP net income. That's the important number because that shows that they are 4 quarters of sequential profitability. That means doors are open to the S&P 500, folks.
Absolutely. Now, this could not have been accomplished without $428 million in regulatory credits.
Yes, those are credits that Tesla gets from probably almost all of them from Fiat Chrysler, who can't make their own EVs, so they need to pay Tesla for their credits in order to meet the fleet requirements of the EU regulations. So that was super huge. And so you can kind of think of it this way, as Jesse was saying, Elon got his first salary this quarter of about $118 million, and they got their net profit of $104 million. So if it wasn't for FCA's regulatory credits, they may not have been able to do that.
So, thank you so much, Fiat Chrysler, for not being competitive with Tesla at all, for not innovating, and for not trying to make good EVs. It's so helpful that this company just wants to kind of lay back, not do any hard work or think too hard. They would rather pay Tesla than invest that money in their own company.
Crazy world.
So they're investing it in Tesla, and the whole world is better for it. So, good for you, Fiat Chrysler. Man, what a terrible company.
All right, so there are a few more stats to go over. We're going to go through them quickly. There were some questions from the call, but then we're going to get to a very important point about where all this stuff leads us to coming up. So stay tuned for that. All right, so automotive gross margin this quarter was 25.4%, which is pretty much flat from the last quarter, which is kind of amazing if you think about the fact of what last quarter was.
Mm-hmm.
And then the adjusted EBITDA margin was up to 20.0%, which is, again, amazing. Cash flow here, I think this is a big one to talk about. They had free cash flow of $418 million, which brought their cash on hand up to $8.6 billion, which is the highest ever for Tesla.
This is exciting in itself because, if we're going into a period of economic turmoil, which everyone has been so worried about, this is great. You have a big old rainy day fund, so that way you don't have to worry too much if you have a lot of crappy quarters coming up.
And we're going to talk about some more cash on hand coming up. So let's talk about superchargers. Never really gets talked about in earnings calls, but here they've shown they're up 6% quarter over quarter, 30% year over year. So they keep building out that network. Also, mobile service and their stores and service locations are up 2% this quarter. Not a great increase, but that's because it was a really challenging quarter.
And it's especially not a great increase considering the number of cars that they've been selling recently. But yeah, it's not the quarter that you're going to go, oh, hi, nice to meet you. I would love to sign this location, right? It's not going to happen.
This is exciting. Look at this. Global deliveries for the first half of 2020. So if we look at Tesla there, which is on the left, they're up 14%. Look at all the rest of the companies, and they are hurting badly.
Wow.
And then there's some fun charts here. These are quarterly charts showing vehicle deliveries on the left, cash flow in the middle, and net income on the right. And again, look at that net income there. 4 quarters of GAAP profitability.
So the first thing that came out of this call that was actually very noteworthy was that Elon announced that they would be opening Gigafactory in Austin, Texas. So Giga Texas is a go, people. So for everyone who's like, oh, it's going to be Tulsa, It's going to be Texas.
He did thank Tulsa, and he said that they'll be definitely considering them for future expansion. But yes, he talked about Austin, and he said it's going to be really unique. He said they're going to have a boardwalk with ecological gardens right on the Colorado River, and he said it's open to the public, so it'll be open to anyone to come enjoy. That's awesome. And he said, hey, come work for us. They're looking for employees.
This is a common theme that you'll hear through the entire call. They really want people to work for Tesla, like really badly.
Elon announced that they'll be making the Cybertruck and the semi-truck at Giga Austin. Also, they'll be making the Model 3 and the Model Y for the East Coast of North America.
Now, the interesting thing here is that this piece of property in Texas is the largest piece of property that Tesla owns. So it would kind of make sense that we might see a Shanghai-style Model 3 and Model Y factory in addition to maybe the same size buildings or something like that for the Cybertruck and the semi-truck. Talking more about gigafactories, he said that in the next 12 to 18 months, there will be 3 new factories in place. So that is a very fast time schedule for Texas. I mean, 18 months?
I know. And I mean, also Giga Berlin. Like it's
right.
It's hard to believe, but that would be exciting if it was true.
Yeah.
And then he talked about Battery Day, which is coming up on September 22nd. And he said, people will be surprised how much there is to see.
I still don't know what to expect. It could be anything, honestly.
Zach Kirkhorn had some opening remarks. And the only one that really I walked away from that was really interesting was that he said the Mega Pack, this was the first quarter that it was profitable. And so I think a lot of us forget about these kind of boring batteries, but they're actually starting to make them a lot of money.
Sure. I mean, I think the other interesting thing I saw was that regulatory credits are going to be double this year than they were from last year. And I mean, regulatory credits, again, coming from Fiat Chrysler, was a huge portion of Tesla's income.
Yeah. Just handed to them.
Right. Again, I know we already talked about it, but like I can't get over how you would be like, hello, competitor. Gee, would you like some cash?
I know.
$100 million.
Yeah.
Ridiculous.
When asked a question about their upcoming product roadmap, Elon said he had to be kind of tight-lipped, but he did say
that it would make sense for there to be some kind of compact vehicle as well as a higher capacity vehicle of some kind.
Oh, so holding more people, like a van or something.
Yeah, I mean, I would love to see a cyber van and a cyber sedan.
Cyber sedan.
Cyber van.
Love it.
Cyberman. But he said that these vehicles were a ways off. He said that there was a long way to go with the Model 3, the Model Y, and Cybertruck. And if you kind of read between the lines, I think what he means here is price reductions. Because we've already seen the first price reduction of the Model Y. I think that we're going to be seeing more and more of that happening, especially as we see some more interesting manufacturing techniques that Tesla probably wanted to employ early on in the Model 3. I mean, you remember, they had some big talk about Model 3 production, and then they went through the production hell. I think that was because they had some really lofty visions.
But they couldn't really
execute immediately. I think that they have been slowly implementing the stuff that they wanted to do, and that we're going to see some pretty drastic price cuts to the Model 3 and Model Y, and I guess the Cybertruck as time goes forward.
So Elon said that full self-driving is overwhelmingly the most important thing software-wise that they'll be working on, and he said it'll have the biggest step change in asset value in history. He said, I can't think of anything bigger. He said, overnight, from 1 to a few million cars will be worth 5 times more in utility.
It's kind of an interesting concept here. He doesn't think that they will all suddenly go from being, worth $40,000 to being worth, $200,000. But he said that basically the utility of these vehicles would quintuple.
Yeah.
So it just goes from being like, oh, I only drive it from here to work, and then I park, and then I drive from work to home, and then I go to the grocery store, and then I go see my mom. It's now the car can just be driving all the time, fully utilized, and that is kind of what Elon is talking about there.
And Zachary Kirkhorn talked about how the plumbing is in place to scale up other areas of software like entertainment in the cars, because in the future, when you don't have to drive it yourself,
you're going to be so bored. You're going to wish you had something to do.
Right.
And Tesla, basically, they have been working on having games in the car, which is something that no other car really has, to my knowledge.
And they also mentioned productivity software.
Right. I mean, imagine being able to have your laptop in your lap and then also be able to plug something in or connect to your car. Put the spreadsheet up on there, and then you're browsing the internet over here. It'd be really cool.
Yeah. So there was questions about upcoming AP milestones.
And Elon responded very interestingly. He said that currently and in the past, the Autopilot had been functioning on like 2.5D. So he means 2.5 dimensions. Basically, things weren't very correlated in time, and that they were looking at flat pictures. They weren't interpolating into three-dimensional space. And he said that now they're moving into 4D. And so for people who are like, Elon, come on, there's no 4 dimensions, he means 3 dimensions plus time. And he said that this is a big architectural change that hasn't rolled out to the fleet yet. So basically, all the Teslas that have ever been on the roads, driven by normal people who aren't Elon, have been experiencing this crappy software, and that we're going to have a huge increase in autopilot capability.
Yeah, he said it's like going from pictures to surround video. So there's a question from shareholders on say.com about the limitations on Tesla's growth being from cell production. What did Elon have to say about that?
So Elon actually had an interesting thing to say here. Basically, they've been making such huge strides in efficiency in the vehicle drivetrain aspect of their vehicles that they can basically put less energy-dense batteries in the cars and still have a high 200-mile range vehicles that they're going to be selling in China. So this is basically the iron phosphate batteries that we've heard are going into Model 3s in China. So this is basically a whole other supply chain that you can funnel into the Chinese market without needing to touch your nickel-based batteries, which are higher energy density, which really need to be used for like the semi-truck production and lots of other higher density battery stuff.
Yeah, I mean, Elon said, if you are a nickel mining company, please reach out to us. Basically, I don't even think you had to read between the lines here. They are nickel supply limited. Right. And so I just want to read between the lines here a bit. It sounds like as soon as Tesla can get into a mining, refining business themselves, they're going to want to so that they can lock down some supply.
Right. There was a lot of talk of mining in this entire call. A lot of times, even with questions that had nothing to do with mining, that you would hear the word mining pop up again and again until, Elon basically just came out and was like, everyone who mines nickel, please give us more nickel. We need more nickel, which is it's a really cool thing to hear.
Well, and it answers the question because a lot of people were kind of wondering, how are you going to have enough batteries for your semi-trucks? And this opens up that new supply chain so that's how they're going to do it.
It's not that the iron phosphate batteries are going in the semi-trucks. It's freeing up some batteries that would have been going in Chinese Model 3s that can now go in the semi-trucks.
Right. So, of course, there was a question about Tesla insurance. There is one every quarter because everyone wants to know, outside of California, there is no Tesla insurance yet. And the question was, why not? And Zachary Kirkhorn was a little more forthcoming this time.
He said that basically their insurance product that they're offering in California is like not that complicated.
Yeah, it's basically a standard insurance product. What they want to be offering is something that they're working on right now, and it's why they didn't roll this out to more states, because they wanted to focus on this, which is
a better system for insurance. And I'm so glad that they got into a little bit of the details here. Essentially, it is going to be how you drive will determine how much insurance you're going to pay. Now, you might be saying, but that's always the case. If you're a good driver, you're going to save. You hear that on the commercials all the time. You will literally, month by month, have a different premium depending on how you drove. Right. So that is a huge change, a huge departure from simply like, let's take a look at your driving record there, sonny boy. It's not like that. It's going to be actually monitoring how you drive as long as you give them those permissions, which means that people who are very safe drivers could be expecting to save a ton of money.
It would also help educate drivers, because now if you're looking month to month at your driving, you'll be like, oh, so when I drive slower and safer, my rates go down?
Exactly. Elon actually talked about how they wanted to educate drivers to tell them what is going to make their insurance premiums go up right after they do it. So if you are speeding going 95 on the highway and a little box pops up and it says, hey, you're going too fast, your insurance premium is going to go up, you might take your foot off the accelerator and go like, oh, okay, maybe I'll save some money, I'll slow down. And guess what that's going to do? it's going to make for safer drivers out on the road. And what that also does is it means it's going to improve Tesla's safety numbers.
Yeah, the CFO said that they're nearly complete with the first version of their telematics system, and they're waiting for regulatory approval, and they hope to have this new Tesla insurance in a few states by the end of the year.
I mean, that is probably one of the most interesting things to come out of this call.
Well, the other thing is that Elon said, if there's only one thing I want to have come out of this call, the number one thing is that Tesla is hiring and that we're interested in revolutionary high-energy actuarials for the insurance industry.
Sounds like an oxymoron to me. I picture an actuarial as like, hello, hi, my name is George.
Maybe because throughout history it hasn't attracted the revolutionary types. But if you want to change insurance, come work for us.
So again, this is a whole other industry that Tesla is about to disrupt. I'm just saying, if you start thinking about other insurance companies, they're not going to be able to insure Teslas. And if you think that Tesla is going to be a growing car company, which it is, these other insurance companies have better watch out because they're not going to be able to compete. They simply can't know how good you're driving. They can have the little phone app or whatever that measures your speed all the time, but it's not going to be anywhere near as good as Tesla.
It's kind of like Elon's a disruptor or something.
Right.
I wish someone would do a series on that. All right, so the earnings call was super exciting as always. Obviously, it was the profitability that made this one super cool because now we're off to the S&P 500. And we touched on this on Tesla Time News last week, but there's a lot of nuance here. But there's something big that's going to happen here, I believe, because of the S&P 500 news, which now we can talk about because it's real. So now that Tesla's been profitable for 4 straight quarters, by the way, 6 out of the last 8 quarters, that means that all of the boxes have been checked to get on the Standard & Poor's 500 index. And according to many financial analysts, fund managers of S&P 500 funds are going to have to purchase between $25 and $45 billion worth of Tesla stock as soon as S&P formally announces Tesla's inclusion.
How are they going to buy those shares?
Well, obviously, they could go to the general open market to buy them, right? But there are only 147 million floated shares.
Okay, but I thought there were more outstanding shares of Tesla.
There are, but those are tied up with long-term holdings like Elon.
And me.
And you're not selling, right? So I don't even think Yahoo knows that. Right. So, but basically, Yahoo has calculated there's 147 million kind of retail floating around shares that could be bought. Problem is, S&P 500 index fund managers would have to buy about 26 million shares.
That's a large portion of the shares.
Right. And so that would drive the share price up a lot.
And another thing is, too, a lot of people know that these people are going to need to buy those shares.
Exactly.
It'd be like if you were selling water at the exit of like a very, very long desert walk.
Well, you're right. It's exactly like when you go to a ball game or a concert and you have to, everyone knows that to get water inside that event, it costs like 6 times more.
Oh, you want water? That'll be $8.
Right.
You're like, what, for a bottle of water?
It's exactly like that. But there is potentially another way for these fund managers to get these shares.
They steal them. At gunpoint, they find Elon in his self-driving car and they say, "Give us the shares, buddy. It's the end of the road for you."
That's not what I was thinking. There is a precedent here for Standard & Poor getting companies entering the index to do a secondary share offering, basically creating shares and selling them directly to S&P 500 index fund managers at a predetermined price.
Wow, it's almost like if you're really rich, you get to bend the rules.
Kind of.
I mean, could I call up Tesla and be like, "Hi, I'd like to buy some of your shares at the exact share price, so that way I don't have to worry about any sort of volatility in the market"?
I mean, maybe if your name is Goldman Sachs.
Yeah, I don't want my last name to be Sachs. Stupid.
But there's another point here, and this is a big one. Before we continue, I just want to make this clear. The S&P 500 index funds are not the only ones that have to buy these Tesla shares. According to S&P, there's an additional $6.6 trillion of money that is indexed or benchmarked to the S&P 500 index. So now if you do the math, Tesla would make up about 0.9% of the S&P 500. So that would be up to an additional $60 billion in stock that other funds would have to buy.
You said up to. Why did you say up to?
Well, because some of these funds may already own the Tesla stock. So we don't know exactly which ones do and which ones don't. So that's why I said up to.
Okay, wait. So I just need to make sure I got this. So you said that basically just S&P 500 index fund managers are going to have to purchase about $40 billion worth of Tesla stock.
Yep.
And other fund managers that benchmark to the S&P are going to have to buy an additional $60 billion worth of Tesla stock, all within a few days or weeks once the S&P 500 announces Tesla's inclusion.
I couldn't have said it better myself.
But you also said that these fund managers might be able to buy these shares directly from Tesla if Tesla does a secondary offering.
Yep.
Wouldn't that mean that my Tesla stock wouldn't go up if Tesla did that?
That's a really good question. In short, yes. By creating shares, Tesla would be diluting the value. But Tesla would get a direct cash infusion of potentially billions of dollars, making the company more recession and pandemic proof and ultimately more valuable.
So let's say Tesla and the S&P agree to a secondary offering of, I don't know, $20 billion worth of shares.
Okay.
Which, just hang on a second. I just want to... $20 billion of just money.
Right.
It's just, they I assume, empty all the banks in like a large radius just to get enough cash to give to Tesla.
Right. I mean, they're going to have to sell a lot
Imagine
of shares
if you're
of something.
the bank trying to verify that. Oh, that's 20 billion of 20 billion. Holy, like, is that what happens?
Yeah, I guess.
Holy crap. Okay, so is that possible?
I actually think that sounds kind of like a reasonable scenario, because then it would allow many funds to get their hands on Tesla shares without the price skyrocketing, and Tesla would get $20 billion in cash. And the remaining $20 to $80 billion worth of stock would be bought on the open market, driving your share prices up. So to me, this is going to be a win-win. Tesla's going to get some amount of billions of dollars. The fund managers are happy because a lot of them will get the shares at a price they can rely on. Mm-hmm. You're happy because Tesla shares will go up. Everyone's happy.
Now, worst case...
Oh, the shorts probably aren't that happy.
They're probably not that happy. Now, let's say worst case scenario. Let's say that Tesla does the secondary offering for all the money that the S&P would need to buy. Mm-hmm. So worst case scenario, Tesla gets $40 billion in cash. But it's bad news for me because the stock price doesn't go up. But Tesla now has $40 billion in cash. So what is the market going to think
Right.
of that?
I mean, that would probably drive the share price up because now Tesla is not only recession-proof at that point, but now Tesla has so much cash on hand that they can do things that most companies could never even dream of.
They could just start giving people cars.
Well, this is what I wanted to talk about here, is that this is the part where I think we haven't thought far enough ahead.
This is end game.
This is end game.
Right,
no, exactly. This is imagine right now Tesla has $8.6 billion of cash on hand that they don't have to do anything with. It can just sit in the bank.
Right. And that could get them through probably 2 to 3 years of losing money at a staggering rate.
Right. Now imagine that in a few weeks, Tesla wakes up and they've got, let's say, 20 billion more in cash. What do you think they're going to do with it? Elon doesn't want to sit on cash. What do you think he's going to do with it?
It's going to go directly into gigafactories and terafactories all over the world. Now, I think that there is going to be a certain cap on the rate at which they can build new factories.
Sure.
Because you need some people who know what they're doing in order to make your new factory. You can't just, it's not like an IKEA set where you hand someone some instructions like, hey, welcome, you're hired. Nice. Here's the thing to build an entire gigafactory. Good luck.
I mean, but Elon talks all the time about the machine that builds the machine. I think that they've really started to refine it. You saw how fast they made the China Shanghai gigafactory.
That's true.
Why couldn't they repeat that, for instance, all over China?
I totally agree. I think that
because don't forget, China is the largest car market in the world.
I think that it would make total sense to do that and to basically just be like, Beijing or somewhere else in China, just start pumping out the cars.
And how about India? How about Australia? How about another one in Europe? How about one in Latin America? I think they could start building them all over the place. Next thing I just want to talk about is gigafactories, yes. How about mines?
Right. This whole call, they were talking about mines, mining. We need more nickel. I think what they're going to try and do is buy out some mining companies. I mean, or the mines themselves and then set up mining companies to go into it. I mean, heck, this is Elon Musk. He owns a boring company. You think that they're not going to use a boring machine down in a nickel mine? I think it could be possible.
Next thing I want to talk about is Elon has bought companies like Maxwell, Highbar. Why wouldn't they be looking for other innovative companies to buy as well?
Right. I think, just in the pace of their factory build out that they could do with an infusion of $20 billion, it's game over for all these other car manufacturers. I mean, first of all, they can't compete with Tesla. The only reason that they're able to sell cars at all is because people have not heard of Tesla yet. Another part of this $20 billion could go into advertising. I mean, Tesla has been lean and mean for the longest time, but once you start making these gigafactories all over the place, it's time to start telling people about the company because they will no longer be production limited, which they have been for so long.
Even if Tesla doesn't do a secondary offering for S&P 500, share price is going to go through the roof. We're already seeing that, which means Tesla can offer more shares to the market. It can dilute because people want the shares.
Right, exactly. I mean, let's say that the Tesla share price even just stays where it is. It would only dilute shares by about less than 1% to build another gigafactory somewhere in the world. And are shareholders going to be mad about that? Or are they going to be like, oh, great, the company's now worth more because you have a new factory, so dilution pays for itself.
Yeah. We were waiting for this day. I mean, I'm still so excited because we're just reporting on this literally hours after we heard about it. Yes, we were all hoping for this, but we weren't sure, right? We saw all the signs, all the hints, but we weren't sure until this report came out. Now we are sure that they're profitable for 4 quarters. This changes everything.
Right. And I feel stupid that I didn't buy those Tesla shorts. I mean, I didn't have a chance to buy them. As soon as I heard about them, they had already been sold out. I'm so mad. I want to hang up the short. They're right there. That's the spot.
I want to have an episode where we both wear them.
I don't want that, but that's fine. I'm just saying this is the end for these other car companies.
And it happens so fast.
I mean, it's, like, I know that I don't watch Marvel movies, but I've absorbed enough through osmosis. This Elon has acquired all the Infinity Stones. He's going to snap his fingers and Ford's going to go, I don't feel so good, GM. And they're going to be gone. Tesla's going to buy up all their properties, tear down their old crappy factories, build up new gigafactories. It's going to change the world for the better. I'm so excited about it. I'm so pumped. And I'm also excited about the share price. That's just a big plus too.
Yeah. So this was just a fantastic earnings call. I'm so excited. I'm so excited to share it with you guys. Thank you for being a part of the community. Don't forget to subscribe and share this video and hit the like button so that more people can hear about this. Because I'll tell you, I've talked to a lot of people this week about Tesla, and I still keep forgetting what a bubble we're in. Because I'll talk to people and they'll be like, why is that big smile on your face? And I'll be like, well, Tesla share price. And they're like, what about it? And I'm like, $1,600 a share.
And they're like, get out of town.
They're like, what? Wait, what? What?
I thought it was at $200.
Why is it so high? And then I'll be like, it's going to take a while to explain.
A lot. It takes a long time. If you haven't been watching us for a couple months, you probably don't understand why this is happening at all. I would suggest you definitely subscribe, go back, check out some of the older videos about how Tesla has been progressively pushing and pushing and pushing, and so many of their very smart moves have started to pay off. And this is just the beginning of the end.
Yeah, it's exciting.
Thank you so much for watching. Now you know.